Welcome to Stock Talk.
Great to be here.
Today we're doing a deep dive into Meta Platforms, specifically their Q1 2025 financial results, which just came out basically April 30th.
Right. And the big headline, a really, really strong quarter.
Yeah, significant growth, revenue, income,
Right.
pretty much across the board.
Mm.
So our mission today is to unpack that. We're looking at Meta's own Q1 2025 financial analysis.
Yep. Digging into the numbers to see what's driving this performance and, what it might mean looking forward.
Exactly. So let's start with those headline figures. Revenue.
Okay, so revenue hit $42.3 billion. That's up 16% compared to the same quarter last year.
16%. That's substantial for a company this massive.
It really is. And what's quite interesting is if you look at it in constant currency, sort of taking out the exchange rate swings, it's actually 19% growth.
19%. Okay, so the underlying business growth is even stronger.
Precisely. It shows real momentum, regardless of currency fluctuation.
And profitability. Because revenue is one thing, but profit tells another story.
Right. And that story is, well, even more compelling in some ways. Income from operations jumped 27%.
27%. So profits grew faster than revenue.
Exactly. It climbed to $17.6 billion. That usually points towards better efficiency.
Making more from what they bring in.
Yep. And you see that confirmed in the net income, too. That surged 35% to $16.6 billion.
35% increase in net income. Wow.
And the earnings per share, the diluted EPS, that followed suit, up 37% to $6.43 per share.
Okay, so across the board on profit metrics, very strong growth. What about margins? Did they improve?
They did, significantly. The operating margin expanded to 41%.
41%, up from what?
Up from 38% in Q1 of 2024. So a nice 3-point jump there.
That really reinforces that efficiency point, doesn't it? Keeping more of each dollar.
Absolutely. It shows they're managing costs well relative to their revenue growth, at least in this quarter.
Okay, so the overall picture is growth and improved efficiency. Let's dig into what drove that revenue. Still mostly ads, I assume.
Oh, yeah. Unquestionably. Advertising revenue was the lion's share, $41.4 billion.
And that grew?
Yep, up 16%, right in line with the total revenue growth. And interestingly, they saw that growth across all their geographic regions for the Facebook family of apps.
So it wasn't just like North America carrying the weight, it was broad-based.
Exactly, which is, a healthy sign.
What's behind that ad revenue growth? Is it more ads being shown or are they charging more? Or both?
It's actually both. Ad impressions, so the number of ads shown, that increased by 5% year over year.
Okay, 5% more ads.
But the average price per ad, that jumped by 10%.
Ah, so the price increase was actually a bigger factor than the volume increase this quarter.
Correct. That combination, more ads and higher prices per ad, is what fueled that 16% revenue growth.
What do you think is pushing those ad prices up? Better targeting, maybe? More advertiser demand?
It's likely a mix. Could be increased confidence from advertisers, maybe seeing better results, which, could tie back to Meta's AI investments in targeting and optimization.
Makes sense. AI improving the ad product.
Potentially. Or it could just be broader market trends, more competition for digital ad space driving up prices. It's a key thing to watch. How sustainable is that 10% price hike?
Yeah, definitely. Okay, let's shift from the money to the people, the users. How's engagement looking?
Still massive. The Family Daily Active People, or DAP, hit 3.43 billion in March.
Billion with a B. Wow. Is that still growing?
Yeah, a 6% increase year over year.
Yeah.
Adding users when you're already at that scale. It's pretty remarkable. Shows the platforms are still very sticky.
Absolutely. And I saw a note about Meta AI users.
Yeah, that was striking. Almost 1 billion monthly active users for Meta AI features.
A billion. That's incredibly fast adoption.
It really is. Suggests users are finding value in those AI tools or features they're rolling out. The big question, though, is how does that AI engagement eventually, translate into dollars or further growth?
Right. Is it just making the platform stickier, or are there new monetization paths there?
That's what we'll be watching.
Okay, let's break down the business segments. You've got the core family of apps, and then Reality Labs. How did FOA do on its own?
Family of apps, the core business, mirrored the overall results pretty closely. Revenue was $41.9 billion, up 16%.
Okay, solid. And the profit from FOA?
Even better growth there, actually. Operating income for FOA jumped 23% to $21.8 billion.
23% profit growth from the core apps. So the main engine is running really well.
Extremely well. It's the cash cow funding everything else, essentially.
Right, funding. Reality Labs, which is a different picture.
Yeah, quite different. Reality Labs revenue was $412 million. That was actually down 6% year over year.
Down 6%. Okay. And the losses?
The operating loss widened. It was $4.2 billion for the quarter.
4.2 billion loss.
In one quarter.
Yeah, that's up about 9% from the loss in the same quarter last year.
So revenue down, losses widening. They obviously frame this as long-term investment in the metaverse, AR, VR.
Right. Strategic investment. They talk about hardware, content, partnerships, next-gen experiences. It's the future bet. But how long can you sustain losses of over $4 billion a quarter? What are the signs we should look for that this bet might start paying off, or at least stop costing quite so much?
That is the multi-billion-dollar question, isn't it? You'd want to see, I suppose, stronger adoption trends for their Quest headsets, maybe more developers building compelling apps for the ecosystem. Any signs of real enterprise uptake could be significant too.
But for now, it's FOA's profits covering those Reality Labs investments.
Exactly.
And speaking of investments, AI is clearly a huge focus, tied into both segments, really.
Absolutely central. They're not shy about saying AI is a cornerstone of their whole strategy.
And they're putting serious money behind that. The capital expenditures.
Huge jump. $13.7 billion in CapEx just in Q1.
$13.7 billion in 3 months.
Yep. And they raised their full-year guidance significantly, too, now expecting $64 billion to $72 billion for the whole year.
Whoa, that's a massive range, but even the low end is huge. What's driving that spend? Primarily AI.
Primarily AI infrastructure, building out data centers, getting the GPUs, the whole setup needed to train and run these massive AI models.
So this isn't just talk. They are heavily, heavily investing.
No question.
And we're seeing the impact already, right? Not just future stuff.
Definitely. AI's powering content recommendations, which keeps users engaged. It's optimizing ad delivery, which, as we discussed, might be helping those ad prices. It's also fundamental to their AR/VR work in Reality Labs. And even things like safety and content moderation rely heavily on AI now.
So it's becoming embedded pretty much everywhere.
Across the board, they see it boosting engagement, efficiency, creating new features. It's foundational.
Okay, let's zoom back out to the overall financial health. Balance sheet.
Yeah.
Cash flow.
Looking very solid there. They ended the quarter with $70.2 billion in cash, cash equivalents, and marketable securities.
$70 billion. Plenty of cushion.
Absolutely. And operating cash flow is strong, too. $24.0 billion, up 25% year over year.
So generating a lot of cash from the business.
Right. And even after that huge $13.7 billion in CapEx we mentioned, they still generated $10.3 billion in free cash flow.
$10 billion in free cash flow after spending almost $14 billion on CapEx.
Okay. Yeah, it shows the power of the core business's cash generation.
And they're returning some of that to shareholders too, right? Despite the heavy spending.
They bought back $13.4 billion of their own stock in the quarter.
$13.4 billion in buybacks.
And paid out $1.3 billion in dividends and equivalents. Remember, the dividend is relatively new for them.
Right. So investing heavily in the future, AI, Reality Labs, but also returning significant capital now is kind of a balancing act.
It is, and it's something investors generally like to see, that balance.
Okay, so the picture is strong growth, good cash flow, heavy investment. What are the clouds on the horizon, the risks?
Well, there are definitely risks. Regulation is always a big one, especially in the EU and the US. Antitrust, data privacy, that scrutiny isn't going away.
Always looming for big tech.
For sure. Then there's the sheer scale of that AI CapEx. They need to show a return on that massive investment eventually. It's not guaranteed.
Managing that spend and proving its worth.
Exactly. Privacy concerns and potential changes to how they can access or use data could also impact the ad business.
Right, like the Apple ATT changes a while back.
Stuff like that, yeah. Competition in digital ads is fierce and always evolving. And of course, those ongoing widening losses in Reality Labs remain a significant focus area and, a risk if the bet doesn't pan out over the long term.
Okay, quite a few things to keep an eye on. So if we were to summarize the key strengths from this Q1 report, what stands out most to you?
I'd say, number one, the exceptional revenue growth at their scale. Number two, the margin expansion, that efficiency gain. Three, the continued user growth, proving platform stickiness. Four, the really strong cash flow generation. And five, maybe the rapid adoption we're seeing for their initial AI features. Shows user interest.
Solid list. And on the flip side, the key areas to watch, the focus areas going forward.
Definitely managing that huge CapEx budget effectively. Navigating the complex regulatory landscape. showing progress eventually on reducing those Reality Labs losses.
Okay.
And critically, maintaining that core ad growth momentum against competition and really demonstrating the tangible ROI from all these AI investments. That's the long game.
So it really paints a picture of a company firing on, well, most cylinders in its core business.
Yeah, the FOA engine is strong.
While making these massive, potentially transformative, but also costly bets on the future, especially AI.
Precisely. It's that balance again. Profitable, present, funding, and ambitious AI-centric future.
So for you listening to Stock Talk, here are a couple of things to mull over. First, how will Meta's huge step up in AI infrastructure spending actually change its competitive position and growth trajectory down the line? Is this spend defensive or truly offensive?
Good question.
And second, while there's some buzz around their newer VRR products, what are the potential long-term implications if those Reality Labs losses continue to mount or even stay at this level for years to come?
Yeah, how patient will the market remain?
Exactly. We definitely encourage you to check out Meta's full earnings release and the related financial news if you want to dig even deeper. There's a lot more detail in there.
Absolutely. The source documents always offer more nuance.
Well, that wraps up our deep dive into Meta's Q1 2025 results. Thanks for joining us on Stock Talk.